Testing 1 2 3, testing 1 2 3. I need a volume check. See if I have decent volume, no volume. 1 2 3, 1 2 3. Volume check, volume check. Seems like I got volume. We are currently trading on the 27th of April, 2026, Monday, last Monday of the month of April. And the NASDAQ is just below all-time highs, or year-to-date highs, I should say. The lighting doesn't look really that great, honestly. Whatever. We're here for the charts, not for my face, I guess. So the main thing right now is whether or not the NASDAQ can make new highs of day, or if this consolidation here, if we can't hold above this dotted line, the open to the close of this most recent candlestick here, if you're not holding above that, you're unable to make new highs of day. You're not getting a continued push higher. Just curious to see where we close, how the trading day ends. If it does or does not make sense to have hedges into the close, hedges into tomorrow's expiration, or sitting on hands, which makes the most sense, we'll just hang out here and see. So some slight sell pressure. We still have 34 minutes until the market closes. Can't close soon enough. It's a nice sunny day out, and I want this day to be over with so I can get outside without wondering what the markets are doing. While we're just waiting around right now. Waiting for 3:50 p.m. 3:50 p.m. last time of day for the algorithms to provide their last time of day for the algorithms to drop their order flow is at 3:50 p.m. I thought that would have cracked my screen. Because it's my lucky day. All right. So we are still in this daily uptrend. The last QQQ before the bell, let me see if I can pull that up real quickly. Go here. So when it comes to the most recent QQQ before the bell report, we had a more neutral position here, neutral bullish, and so far we've basically been maintaining above the midpoint but not getting a full bull scenario. The full bull scenario was anticipating range breaks towards 668, 669. Obviously, we are stuck below yesterday's highs. We made highs above that in the pre-market session, but no continuation so far. So we'll have to wait and see how the day closes to see which trading scenario really worked out the most. The Friday's high of day clearly being the most important day, most important price, I should say, of the trading day. So we're just stuck here sideways, consolidating. See if we can break back to this trend line or not. So into the close now, we have the QQQ, that's the QQQ. So there are basically 30 minutes until the close, so an expected range of $1.20. So this is my IV low. Make this stand out so it's orange, and 654. What did I do wrong there? Something's not right. Why is this Excel sheet saying we are 655 when we are clearly not 655 anymore? Let me see. Probably need to reopen it. All right. This is something we can show in another discussion video. We're just 663 and 3/4 now. I need to update this so it's the QQQ. The implied volatility needs to be for the QQQ, and we have essentially 30 minutes until the market closes. So $662.5 is my IV low at 3:30. The IV high, 660, basically 665. Okay, all right, there, let me look at this real quick. So I think we can get at least, it's not unreasonable for a break of range out of yesterday's range to get a push another dollar, 0.16%. That's the dynamic IV high. So essentially, what we're looking at here is taking the session open as a pivot point, and from there trying to understand what is the full session IV range. Let me look at this. Use the prior days. No. Okay, good. It says no. That's good. Essentially just trying to understand where could price be experiencing resistance or support. We are currently trying to climb here for the implied volatility high. This would be a 664.81 cents. Depending on how much range we get, and how quickly this occurs, this can really be beneficial for us. So the dynamic range, the dynamic IV high, that can't be right. Yeah. Our upper midpoint is, okay, that's my upper midpoint. Right. So I think the upper midpoint here, half of the range makes sense. I'm just going to update it real quickly in a Discord, just share my thoughts. What is this? I got $1.20. So There's not much to really comment on other than how we're kind of stuck. I'm not even sure if I really want to use that wick as the high of day. Yeah, there is no other wick there, so that's really just the high. And now we need to remain above this candle's 50%. The prior 3-minute candle's 50% here. If we can't hold above that, then you're going to start to see either some strong sell volume as we reject high a day and there's profit taking, or we're just stuck sideways into the close. You're pinning the close in this tight range, or a few little pullbacks on single candlesticks result in some liquidity for the buyers to step in and push price higher. It really depends how they want to close this. It would be great to get an end of day break to new highs and close into the highs. That would be really nice for the buyers to signal we're still in control. We are euphoric, but we are not at a full-blown state of euphoria where we are endlessly blowing off the prior all-time high top, just extreme moves. This is pretty well controlled. This is not a euphoric rush to new all-time highs by any stretch of the imagination. This is a very controlled, I would argue, algorithmically and calculated movement for the markets today. Question is, where do we want to pin? Where do they want this close to pin the day? That's not great. Ooh, that's not great. Some selling volume coming in. See what happens into this close here. Still 13 minutes before the 3:50 p.m. volatility window. So some decent sell volume taking it back down. See if this is a bounce area where the buyers are going to step in and defend, if this is just a dead cat bounce, or if we actually see some pure price agreement between the buyers and sellers. You're pinning it sideways. You're not getting aggressive moves in other direction. I should say either direction. Just curious to see where they close this, honestly. Where do they want to close this? The 3-minute, I know that this is the time frame I should be on. It just, when it comes to the end of the day, seems as though it's moving in slow motion. Let's just see how we trade. If we can back test and break above the prior 3-minute candlesticks 50%, that'd be pretty useful to see that there are buyers overcoming sellers on the small time frames. So again, back to that 3-minute chart here. If we're seeing price break back above this point here, I'd argue that the first point is the prior open to close here. You need to be above 663.76. Let's see what kind of move we get. If this thing can get a little aggressive into the close, the 664 calls are only 20 cents out of the money, 15 cents out of the money. What are they trading? 46, 47. Yeah, that's my fill from earlier. These things will probably expire worthless if I'm going to be honest. They won't give us a strong trending move. I have a long hedge. Therefore, the market refuses to give us just a pure rocket to the upside. If for some odd reason President Trump decided, hey, we're going to have no war in Iran, that would be a sell the news event because I have long hedges. The long hedges will only profit if we get a movement higher. And that doesn't seem to be the case. At least not at the moment. So I was looking at basically this pre-market, the lower high here, and seeing that maybe this area can be tested. If we can come back to that area, that'd be great. But I mean, it's going to require a decent amount of buy-side liquidity. We're still below Friday's high a day. So the pre-market broke above Friday's high, but we've failed to hold consolidation above, and we've never tested and broken above Friday's high during the market hours today. So not looking good for the buyers. They look like they're getting tired. I'm getting tired watching this. This is not an exciting close, but honestly, should be expected. Can't get back above this area. Lower highs holding here. Lower highs lead to lower lows. See if the sellers, whoops. Drunk driving. My mentor used to say that whenever you mess up. Drunk driving. On the screen share. Okay, let's see if this is higher lows. The problem is, we've had this high a day, and this right here is a so this right here is not exactly the structure that gives you strong alignment for continuation higher. This is the kind of structure that signals we're more likely to be stuck and digestive than we are to get a strong trending move. And it could be that you get some profit taking into the close that really breaks this range. You could get buy-side liquidity off of a news event. There could be rumors. It could just be algorithms being more aggressive to the buy side into the close. Anything can happen. Until you're above this area here, nothing really useful. So 1, 2, 3. Need to be above each of these areas to get back higher. See where the C664s are. They're trading 42, 43 on the bid ask. They're still 20 cents out of the money. Ah, jeez. If this thing can really get an end of day break, I'm going to laugh my ass off. That'll be really funny. See if this can get continuation. If it just wicks right back down and you're not closing into strength, you need repeated candlesticks closing into the highs. I would look for, if you can actually clear this area, that confluence to being that point right there, 664, 38 cents, that'd be nice to actually like get there, but something tells me that the buyers they're running low on gas. Okay. Okay. That's what I'm talking about though, is the instant wick back down. It's probably not going to fill me. So we made that slight new high. The question is, are these buyers aggressive enough to close into the highs, or is this, we want to pop to a new high and then we are going to sell, have profit taking in the final 14, 15 minutes? That's the question that I have. Go back to the implied volatility calculator. We have now 15 minutes, 85 cents. I need 59 cents. That top wick doesn't look good for the buyers. That would signal that the sellers are here. It could just be some initial profit taking and we make new highs, but until we're closing above that wick, there are still sellers in this market. Look at some stuff on the back monitor real quick. I still like the 10-minute. The buyer's strength is still overwhelming the seller's strength at the moment on the 10-minute, but that could flip, honestly. That's not guaranteed to push into the close. Whoops. So we still got 2 minutes until the final 3:50 p.m. window where the volatility really starts to spike and get wild. I'm tempted to just cover everything now at the current price. If I do cover it, I will get the pop in my favor. If I don't cover it, we're going to collapse. It's kind of that Murphy's Law, damned if you do, damned if you don't. Just keep moving the exit order closer. Just need a little bit of a pop. Something tells me it's going to be one of those days where it's like, nope, we're not going to get your exit order filled. We are going to get extremely close. Extremely close, and then say, nope, no can do, sir. We cannot help you with that today. It's basically there. All right. It's two of those off at 60. Let's see if these actually can break to 80 apiece. Or if those are kind of done for the day. 664 calls, 20 cents, 18 cents in the money. We are on the 1 minute chart. We have only, oh, here it comes. That is the volatility stick coming in. Oh wow, that's the profit taking that you don't want to see as a buyer. So we made that new high a day. The selling pressure came in. We actually hit that wick perfectly. See what these contracts hit a high of. 63. They never got close to that 80 target. They're not going to close in the money. They should sell this thing, right? There's going to be a little bit of profit taking. I mean, that's a bias, completely a bias. The idea that we are going to have this kind of volatility, only 5 more seconds until this candlestick closes, they're really going to push it back up. Wow, look at them go. There goes my hero. The NQ Bulls that just never stop. Unreal. Pretty unbelievable that they are able to, even into the close, with everything that's going on geopolitically, the algorithms, they're fiending for higher prices. Cue the Playboy Cardi. Wow, they're 68. They're going to hit their 66, 68 on the bid ask here. There's no way you're actually going to get to 80. What would that look like? How much higher do you need to go, man? That's not it. That's it. I've got, let's just say only 5 minutes. We've got 8 minutes. 50 cents? You can move 50 cents? I don't know, man. 50 cents. How much do I need? I only need 20 cents. Yeah, that's not going to happen, though. It's not going to happen. Just leave the stop loss at 50 and just leave it alone. Either we actually get a movement higher, or these things are going to stop me out and then close out of the money. They'll probably stop me out and then close deep in the money, if I'm going to be honest. There's 8 minutes left. We've got a 50-cent range, a 60-cent range. The sellers didn't get it over that trend line. There he goes, filled at 49. That's unfortunate. Is what it is. The 665s can't go in the money, though. No. That's... maybe the 663s get close. I mean, if we're going to sell, this thing isn't going to do anything into the close. We're probably just stuck here. I'm tempted to do something. I mean, is it really even that stupid just to spend like $15 on a put if we're actually selling a little bit into this close? Because they could just bounce it right back up. Let me think. I think that it's a waste of money to take a hedge here. Because we're probably just going to pin the close between 64 and 64 and a quarter. I like the 663 puts at $13, but it's a waste of money. The idea is if the profit taking continues, you close with the contracts out of the money, and then if there's continued selling volume after the close, the contracts may push in the money, but it is occurring after the market's closed, so your broker, they aren't going to, they don't have to auto fill you. You don't have the obligation to take ownership because they technically close out of the money. So it would have been these at like the $13 mark here, kind of. My mouse would work. That was the idea. And again, it's a stupid idea. You know, there's a reason I didn't take this hedge, because we're not really going to move anywhere in these final few minutes. And even if we do, it's such a marginal amount of range. The premium on the contracts doesn't move enough. So I should have had these covered all at 60 instead of 60 and then stopping out at 50, even though that filled me at 49. I mean, whatever. The average fill exit is 55. The high was, I think, 68 or 70, if I'm not mistaken. So the 80 price target, that was, these hit a high of 70. Yeah, those, let me see if it's, I'm pretty sure it's these contracts. Yeah, these ones here. So early entry, averaging in, covering for small green. It's just simple risk management. I really should have been targeting 60 as the exit just based on that 50%. Would have made a few extra dollars, but again, it's not the end of the world. I just remembered I leave this, the chart is on a mark. It's not on the last price. It's on the midpoint, the mark between the bid and the ask. That's why there's no volume. How much range do we even have? I mean, it's only showing like 85 cents of range if you look 15 minutes after the close, because you can technically trade till 4:15. But yeah, taking the short, I mean, are the C665s going to go in the money? That'd be funny. That'd be so annoying. Oh my gosh, don't do that. They're not going to do that, are they? You just reject the order? What the heck? Oh, I'm in the wrong account. Oh, shit. I'm glad it didn't fill in the other account. Jeez, that could have been bad. Last thing I need is the wrong accounts having orders fill in it. They don't want to send this. I mean, they could, but they're not. Yeah. I wonder if the 10 minutes changed at all. I mean, this just doesn't look that great for either side. Maybe there's a little profit taking. I mean, we're closing near the highs. Shit. So boring, man. The days where I'm free are the days where the market gives us the least amount of range. I mean, come on, bro. I ask for a trending move and I barely get a 90-cent pop. Oh, whatever. Oh, let's just see if this actually gives a decent little move into the close or not. So, doesn't look like much is going on. Yeah, where did those 664s I had close? Where did that close at? Yeah, that was. I'm glad that I left that stop loss. That's because these things will fluctuate. They're in the money. They're out of the money. They never went above 70. Yeah, that $80 price target was nice, but not happening. Not happening. The 663 puts, those need a dollar range still, unless the futures in the next few minutes get really ugly on NQ. I mean, not much going on. Yeah, I don't know really what else to talk about. I'm pretty tired and it's a nice day. I got to get outside. NASDAQ is just below year-to-date highs. The bull trend remains intact. I doubt there's anyone in chat that wants to ask questions or has anything they want to ask. Any shit you want to talk. Talk shit in the chat. That's nothing. That's just a dark pool order. If we look at the NQ real quickly, there's nothing there. There's no bottom wick. So that's just the NASDAQ ETF, the QQQ, doing its dark pool thing, honestly. No one in chat with questions. We are pretty low-key day, honestly. It's chill. The tensions in the Middle East have become normalized, either that they have peace or we've just normalized the constant chaos that's going on there, I guess. One of the two. So basically taking Monday here, comparing it to Friday's intraday range, you can just see that we were really just holding above the midpoint. That's the main reason to remain bullish intraday. Looking for long hedges on the consolidation above that midpoint, looking for a high-a-day retest. Made slight new highs. Weren't able to really get the strong buy-side liquidity required to get a break of highs and continuation higher. On the daily, we're still green on the year, $686, $690. That's the next upside target I have for the NQ futures ETF QQQ. My neighbor just got home. It's going to get loud as fuck. All right. We are in this uptrend. Buyers are still in control. Check out Bitcoin real quickly. I don't think it's been able to... What is wrong with Bitcoin? I don't get this fucking thing, man. Like 80,000. Are you allergic to 80,000? What is going on? The high here, $79,930 per Bitcoin. What are we doing, guys? Why? Why can't you get 80,000? I'm not even a Bitcoin guy. I don't own Bitcoin. I don't give a fuck. But just what's up with this 80,000? This area here, like this gap from end of January to the start of February, Is this like the Bitcoin, the crypto market nail in the coffin? Like if you can't fill that gap, this market is going nowhere upside. So I don't know what's going on with Bitcoin. It's confusing to me, genuinely. How something denominated in dollars. So a basket of goods, that is, you buy US dollars with it. You go to the grocery store, a $100 bill buys you $100 worth of groceries. That amount of goods you get compared to 10 years ago, it's not the same basket of goods because the purchasing power of the dollar has declined. Takes more cheaper dollars. They buy less goods, they're less valuable, they're cheaper. It takes more cheaper dollars to buy the same basket of goods, so prices inflate. That's not how you spell tomato soup, I know. There we go. So, long story short, without these ads in my way, ever since is it ironic that the removal of the US dollar on the gold reserve system, we're no longer backed by gold in the 1970s. It just so happens that everything denominated in dollars ever since when we moved from a gold-based currency to a fiat debt-based monetary system, that transition just happens to coincide with the inflation of all things denominated in dollars. Housing, stocks, tomato soup, oil, everything. Everything that you denominate in dollars, it is deriving its value. We measure it in dollars. We are only printing. President Trump hasn't come out and said we're going to stop the printer. No more debt. If he said that, it'd be nights. It'd be night, game over, night out. It's on. It's done. We can't have that occur. You can't stop the money printer. So the cost of everything goes up and up and up. It's the most common sense thing in the world to me. And yet the average American will not understand that their dollar is only losing value. They only care about their SNAP benefits, no longer buys them Cheerios and soda and whatever poison that they buy from the grocery store. But looking at Bitcoin here, it's just confusing to me that you're denominated in dollars. Dollars are only getting printed. The government will make a new spending bill. They're going to probably shut the government down for some bullshit reason. And then they're going to have to, we passed another $1 trillion bill, another $500 billion for the government, $500 billion for the military, I should say, whatever. And because they just continue to print and print, the dollar becomes less valuable. Things denominated in dollars go up in price, like Bitcoin here. But Bitcoin failing to get over 80,000, it's like, what are we doing? If you can't get above 80,000, you might as well go down to 60. You might as well go down to 70, 60, 50,000. Get a real bear market. Not this bullshit year to date we're down. I don't want your AI summary. Why am I on Yahoo? I hate Yahoo so much. It keeps doing this garbage, man. I'm not going to have a rage-filled response just because, is my Google Chrome hacked? Why is it always going to Yahoo? I keep changing it. Nobody wants Yahoo as their stupid default. I'm using Chrome for a fucking reason. What is this? What is this garbage? No one asked for Yahoo. Man. Because when you Google it like this, I'm Googler. Why can't I just have Google results? Stop giving me the bullshit Yahoo Finance results. I'm going to crash the fuck out. Because the Yahoo Finance results are fucking garbage. I have Google Chrome for a fucking reason. I did not ask you to give me Yahoo Chrome. If I fucking wanted Yahoo Chrome, I'd go and fucking make it myself. No one asks for this dog shit. You take a good product, Google Chrome, and then you shit it. You shit it down the toilet. You wipe your ass with it and go, here's Yahoo. Yahoo Chrome. No one asked. Just everything. Everything in this country, every good thing has to be destroyed and ruined. Can't leave a good thing alone. Bitcoin year to date, it's down 12%. That's nothing. That is fucking nothing for Bitcoin. This thing can be down 50% by the end of the year. Who gives a shit? Where's my weekly? There's my weekly. If you go back in time, I've been talking about Bitcoin for a while. I was talking about how one of the different scenarios that Bitcoin has is that it gets stuck. And it's been stuck here a lot less. It's resolved this area faster than I had anticipated. We were previously in this area here. And again, this range is just taking what Thinkorswim, the broker here, Thinkorswim, it can only go so far backwards. It doesn't have the full length of the Bitcoin history. It's just not available. So looking from the low of 2019 to the high of 2025, that range there, you're seeing that 50% is a pretty key level. You can just see that we've spent a good amount of time. We came back here consolidating, holding above it. That's bullish. It's bullish to remain above that midpoint. The problem is you're not getting over that 38.2%. 79,826. That's actually more important than 80,000. To achieve 80,000, that's of a psychological level. Psychologically, the round number of 80,000 is important to a trader, an individual, psychologically. But looking at just the midpoint, the 38.2% of that 2019 to the all-time high range, you take 3,000, what was that, 3,120? 3,120 all the way to the all-time high, $127,240 per Bitcoin. 38.2% of that range is that 79,826. We're failing to break and hold above that. We tested it for the first time today, but there is no consolidation above. You need consolidation above in order for price to fill this gap. I don't get it. I don't get why Bitcoin is being this way. Bitcoin is almost like you're in a relationship and your partner, your girlfriend's like, hey, I really want sushi for dinner. And you're like, okay, we'll go get sushi. And you're having sushi. And they're midway through the meal like, I didn't really want sushi. I really wanted pizza. It's like, what? We're there. We're eating the sushi. We're having the meal. I haven't paid. Like, why not say this beforehand? If we're going to reject 80,000, you might as well just drill it to 70. If you're not going to break 80,000, you might as well drill it to 60,000. You might as well just collapse this fucking thing so the average investor can get it at the cheap. We might as well go down to 36,400. Truly. Truly, if the market cannot overcome 79,000, 80,000 per Bitcoin, if you're not going to fill the gap, you might as well collapse. Provide some alpha to the downside. Short hedges. Trade Bitcoin to the downside. Take MARA as a short position. This is me talking to myself. This is not financial advice. This is not a recommendation to anyone reviewing this or watching. This is for my own, personal discussion. I look at buying MARA below $10. I would long it as a hedge relative to Bitcoin, a Bitcoin proxy. Below $10, I'm more considerate to the upside. Above $10, I'm more considerate to the downside. It's not I have to be short, but just looking at this chart, I mean, it's not looking great for that weekly. The fact that this weekly candlestick isn't really trying to test the prior weekly's highs, maybe the traders of MARA are in the know. They understand that this is a stock that is struggling to climb higher, and it will more likely roll lower. I'm just thinking out loud. This is not financial advice. If I want a position that it has exposure to a cryptocurrency volatility, like Bitcoin's volatility, but I do not want to open a cryptocurrency account, I would day trade or invest or hedge my portfolio via MARA, a Bitcoin proxy, a company that mines Bitcoin, keeps Bitcoin on its books. It is a proxy for Bitcoin. And they've also expanded into data storage for enterprises, business to business data storage, which is actually good. You want it to diversify itself outside of a pure Bitcoin trade. It has its own financial risks. It's a Peter Thiel project, so he loves the Antichrist. I don't know what to tell you. Peter Thiel, he's a weird motherfucker. He's all about the Antichrist. He's all about consciousness transcending the limitations of life because you're afraid to die. Suck it up, idiot. Everyone dies. What? These billionaires, like, they devote their entire lives to making money. And then it's like, well, the whole point of making money was to create a cryo chamber where my body can survive until technology advances to the point I can be immortal. And you're going to upload your consciousness to, whatever cloud program bullshit. That's the whole point of them getting rich. Peter Thiel's just another deep state agent. And it's like, I'd rather put my money in a stock that has connections to the deep state. I mean, QuintelPro exists. Just Google it. Just do a basic research on, hey, does the CIA have a finance arm? Does the CIA ever finance companies? I wonder. So, MARA is not just a Bitcoin proxy. It's your favorite deep state stock. That's actually Palantir. That's actually Palantir. I lied. Palantir is your favorite deep state stock. Which year to date, it's not doing great. But I mean, this thing has been on a tear for a long time, so. I just definitely got off on one too many side tangents. Bitcoin is confusing. I remain bearish in the short term. I was trying to shift my position to be more dynamic. If the market wants to push higher, I'm not going to be a stick in the mud and have a short-term bias that is to the downside when the market is providing evidence it wants to move higher. The problem is 80,000. That is the psychological level. Just see my old YouTube videos real quick, because I'm fairly certain I've done this. I think it was in 80,000. Yeah, so I've been talking about Bitcoin for a while now, and how 80K was, this was back when? This was 2 months ago. Yeah. So February 1st, 2026, after that gap down, we've done nothing but roll lower, and we've failed to even try and fill this gap. This gap remains unfilled completely. I've been basically short Bitcoin in the short-term thesis and remain short until that 80,000 level can be reclaimed. Every time we get really close to it, I start to wanting to shift to bullish, front run the move. You're going to get caught off sides. I'm telling that to myself, honestly. There's no one watching these live streams. I'm actually a fake YouTuber. This is a fake YouTube account. I'm not an actual streamer. Chasing Bitcoin long here, to me, just doesn't make sense. It can't overcome 80,000 at the moment. If it breaks 80,000 and then rockets 10 grand to 90,000, I will be sidelined. I will have missed the move because the confirmation, the consolidation didn't occur in the manner that I would like it to in order to feel confident or convicted in adding to the position. So Bitcoin, until it gets back above 80,000, I don't know. I remain short-term bias, bearish, long-term bias, bullish. But where's the bottom in Bitcoin? It could be 43,000, it could be 40,000, it could be 36,000, it could be 50,000. I don't know the exact low that Bitcoin will have year to date, but it doesn't like 80,000. It doesn't like over 79,000. Like the yearly range, our year-to-date range, $79,103 per Bitcoin. That is the midpoint of our yearly range, the high to the low of the year. Being beneath that midpoint is not bullish. That's not a sign that the buyers are in control. If the buyers are in control, we're consolidating above the midpoint. We don't see that right now. What we see right now is a rejection of the midpoint for 1, 2, 3. This is the fourth trading day. 1, 2, 3, 4. The fourth consecutive trading day, we are rejecting the midpoint on Bitcoin. Es no bueno. Es muy mal. Not good. Not good, chat. We need, as a Bitcoin bull, we need consolidation above 79,000, above 80,000. Until that happens, you're screwed as a Bitcoin bull. Long-term perspective, sure. Bitcoin is denominated in dollars. The US dollar is not a good store of value. You take a $100 bill, you put it in your pocket, you throw those jeans in the closet, forget about them. A year later, 10 years later, that $100 bill will still buy you $100 worth of goods. But that basket of goods, how many boxes of cereal, cans of tomato soup, how much can you buy with $100 today versus $100 10 years ago? Very different because the purchasing power of the dollar declines. The US dollar is not a good value, or I should say not a good store of value. The US dollar, not a good store of value. It is a good medium of exchange. It is a good unit of account. Unit of account, medium of exchange, store of value. The three factors of currency, the three principles of currency. Bitcoin is a superior store of value, so long term, it is worth, according to some financial advisors, I am not a financial advisor. I am not giving financial advice in any way, shape, or form. Some registered financial advisors claim 1%, 2%, at most 4, 5% of your portfolio allocated towards Bitcoin, because if Bitcoin has an asymmetric return, that small capital allocation of your portfolio can have a large asymmetric return. If it goes down, it's only 1, 2, 4, 5% of your portfolio. So I'm not a registered financial advisor. None of this is me giving financial advice. Above 80,000, I feel more confident in providing or taking, I should say, long positions on Bitcoin proxies. Below 80,000, I'm hesitant. Below 75,000, I'm opening the possibility to short hedges on MARA or other Bitcoin proxies. I don't think this is the place to jump really heavy risk on. This is not that's not the move, in my unprofessional opinion. In my opinion, risk off. You're standing on the sidelines with cash ready to deploy, waiting for confirmation. We don't have confirmation right now. There's no clear confirmation. Are the buyers in control or are the sellers in control? The buyers have been in control, making price climb higher since early April. As April comes to a close, will the buyers remain in control? That is the important question. Who will be in control of Bitcoin's price, the buyers or sellers, as we enter May? As we continue to reject the midpoint of the yearly range, 79,103 per Bitcoin, until we're above that midpoint, I'm not loving it. It's not good for Bitcoin in the short term to be below the yearly midpoint. That is the first key level that buyers need to overcome. Without that, you're stuck consolidating, you're stuck lower highs, you might even get violent sells lower. But that's really all I have for Bitcoin at the moment. I've talked about the NASDAQ. What are we up year to date now? Yeah, you're still up 7% year to date. There's multiple unfilled gaps. It's not even worth talking about them because these gaps to the downside are so far away. You would need to be back testing the prior yearly high in order to even, get the second unfilled gap. There's technically the gap here. That's a massive gap from the 7th to the 8th of April. And the upside target, 686, 690. I would say by mid-June, late June, that can be tested if the volatility needs to back test. May might not be a clear bull market. It might provide two-directional volatility where we need to back test support before we can climb higher. There's multiple scenarios that can play out for the month of May. We're just below the yearly highs. We didn't close into the highs. We closed just below high a day today. I would say so there's that unfilled gap. You have about 1 to 3 unfilled gaps here. Those gaps remain irrelevant until you start coming below 658.5. Then you're looking to fill the gap here. And then you'd have to be below 650 in order to fill the second gap down here. The NASDAQ remains in an uptrend. Equities are a little overextended if you look at the Z-score, if you're trying to look at the volatility. I would say this is the area to be a little more cautious. This is not the time to be max short. This is not the time to be taking short hedges. It is instead the time to manage your positions, consult with your registered financial advisor, understand your portfolio, your risk aversion. How close are you to retirement? If you are a few years away from retirement, you want to have less risky investments. Stocks are riskier than bonds, so you'd rather have a money markets fund, money sitting in bonds, risk-free rate of returns. If you have multiple decades like me, you are not anywhere near your retirement age. You can be more risk on. But that does not mean max risk on when we're at all-time highs. Who wants to buy at all-time highs? You want to wait for opportunities. So NASDAQ is in an uptrend. Nothing really to warn about. If we start to test these unfilled gaps to the downside, we might fill half of it and then get a strong bounce. It might be an area where there's a lack of liquidity, and because we have no real buyers in the market, we just we could see a knife all the way through, down, filling the gap very quickly. It depends how liquidity is positioned along the index. But we're in an uptrend. We're up 7% on the year. Pretty insane recovery. When you look at how we were down 10% to now we're up 7% on the year, 19% rally off the low. Can talk about the SPX in another video. I'm working on, what exactly is the upside target. The fundamental analysis for the SPX cash index, 7,600, not impossible. Looking at a PE ratio of 25, an earnings per share value of 305, that fair value is 7,600. So that is greater than the next algorithmically derived target, the next extension here, 7,425, based on the original intraday high, the original yearly high to the low, that range, using that upside extension on the Fibonacci, 7,425, that would be tested obviously before we get to the 7,600 level. And that is a fundamental analysis price target that we will not gravitate towards by the end of the month, by the end of the year. Maybe end of the year, and it's not a straight line. It is not a straight line. It is back and forth. It is going to be a volatile year. I'm working on the S&P 500 cash index update for the month of May. What are the remaining upside targets for 2026? Because it seems like every time I issue a SPX report, the upside targets just keep getting achieved. So no real update for MARA. MARA really just going to follow along with Bitcoin. It's a proxy for Bitcoin. Bitcoin, unless it's above the midpoint, 79,000, 80,000 per Bitcoin, I remain bearish in the short term, bullish in the long term, looking 5-10 years out. But that long-term bullish thesis does not mean I want to take long hedges right now. Not even close. We don't know where the bottom is in Bitcoin, and it's a fool's errand to pretend like you can predict it ahead of time. Price will tell us. Price is giving us a hint right now. The fact that right now the buyers can't get it above the midpoint, that is a signal in real time that the sellers are in more control than the buyers in the present moment. So the year-to-date lows may be retested. We may never see 60,000, 64,000 per Bitcoin again. It might be tested tomorrow. Anything is possible in Bitcoin. It is a very volatile security. Most people forget that. It is one of, if not the most volatile commodities or securities that you can trade. A security, not a commodity. So that's really the main things to talk about. 10-year yield slightly climbing. I don't love the 10-year yield climbing higher, but it's below 4.35, 4.4%. If we're above 4.4%, you can be on guard. Above 4.4%, you're starting to trend with rates climbing higher. Year to date, we don't want rates making year to date highs. If interest rates are higher, borrowing costs are higher, the interest accruing on the national debt is more and more. You don't want interest rates high. Low interest rates are good for real estate investment. They're good for stocks. They're good for risk on assets like Bitcoin. The problem is if we bring interest rates down too quickly and the inflation rate is still elevated, you could cause hyperinflation. That is seen historically, Weimar Republic. We are not in that scenario. The people making the comparisons are the same people that have been claiming the dollar is going to collapse, the dollar is finished, since the mid-2020, mid-2021 area. People have been claiming the dollar will be replaced forever. They're Chicken Little screaming the sky is falling, when in reality, the US dollar is the world's reserve currency. It is the most stable, robust monetary system we have to date. Are we going to start using rubles, the Chinese yuan? Come on. This is the current scenario. The dollar is the world reserve currency. It doesn't matter that a few foreign nations no longer use the petrodollar. So the UAE, Saudi Arabia, these Gulf states, historically, to buy oil from them, you needed to transact in dollars. There's some reports that some UAE, Saudi Arabian deals between China, they're transacting in yuan, whatever. It's a very small percent of the global trade, a very small percent of the oil trade. The petrodollar is still the world's reserve currency. Until the US dollar finds a real replacement, the BRICS nations, maybe if Russia and China actually trusted each other, maybe if India and China didn't share a border and hate each other's guts over their border disputes, maybe if they had some friendliness. I mean, the US and Mexico, the US and Canada, we don't love each other, but we get along. The border is not being openly disputed. That's not the case with China and some of its border nations. So, to argue the BRICS nations are a legitimate concern to the US dollar, I mean, sure. Asteroids are a legitimate concern to the safety of the human race, but what's the probability of this asteroid hitting the Earth in end-day doomsday scenario? You got Apophis in 2029 that may or may not hit us, but outside of that, it's a near zero probability. I would give that with the BRICS nations. Until the BRICS nations actually realize their potential, they put out a white paper, they have a proof of concept that their nation's citizens are willing to transact in. There is an actual demand for the currency that is being supplied. It needs a store of value, a unit of account, and a medium of exchange. Unless the BRICS nations can provide a form of currency that meets those three pillars of currency and their citizens are invested, they have a demand for what is being supplied. Until that happens, the US dollar is the trade-weighted dollar DXY. It's the petrodollar. It is the world reserve currency. It's really not hard to understand that, like, 2025's range, the all-time range for the dollar, we are not doing anything. People talking about the dollar is losing its value and losing its value. The trade-weighted dollar has declined in value, but still, it is the world reserve currency. It is a stronger currency compared to the basket of goods that comprise the US dollar index, the DXY. The DXY is calculated by taking some euro, some rubles, some pounds, Mexican pesos. I don't even know all the different currencies. a basket of foreign currencies and relating that strength compared to the US dollar. That's what the trade weighted dollar index is. And when the US dollar index is going down, typically stocks are moving higher. If the trade weighted dollar index is moving higher, typically stocks are moving lower. It's not a one-to-one correlation. There is a causation, but it's not a one-to-one relationship. So the trade weighted dollar, it remains robust and steady. The 10-year yield, it's climbing higher. I don't love seeing us above 4.3%. I'd rather it be 4.2, 4.1. If the 10-year yield can hang out in the 4.2 to 4% range, that is showing stability in the debt markets. That is signaling that there will be less volatility in the stock market. The stock market volatility is not always, but it is very often preceded by volatility in the debt market. The debt market gets volatile, then the stock market gets volatile. Typically, not always. Talked about Bitcoin, everyone's favorite cryptocurrency. It's really stuck, I would say, yearly range or max weekly range. The 2019 low, 3,120 to the all-time high, $127,240 per Bitcoin. The midpoint of $65,180 per Bitcoin is held as support. However, the top of the golden zone, the 38.2%, aka 79,826, that is acting as a point of resistance. Until you're above 79,000, 80,000, consolidating, holding above, you will not be filling the gap from the end of January into the start of February of this year. So Bitcoin still short-term bearish, long-term bullish. QQQ, really wild weekly chart here. Question is, are we going to see a bit of exhaustion? Can the buyers continue this rally higher, or are they exhausted? They've done all they can do. They've rallied the market almost 20% in the span of 4 weeks. So now the buyers are exhausted. The sellers are stepping in and gaining control. That could happen. It's a scenario. But so far, we're just below the prior week's highs for the first trading day of this week. It is the last Monday of the month of April. See if there's any questions, comments, concerns in the live chat. I doubt there's anyone with a question live here, but if you do, you can ask it. Doesn't look like anyone has questions in the live chat. I think I've covered everything. I'm not really sure what else there is to highlight. This has not been the most polished and well-prepared live stream. This is just kind of off the cuff. See how the market closes. The QQQ before the bell report. So again, the QQQ before the bell report that was issued ahead of Monday, April 27th, the bias was still bullish. Just highlighting the key levels here. 660.5 being Friday's midpoint, having the different upside extensions. Neither of them getting any relevance today. Downside levels, the pivot. The bull scenario didn't really activate because we weren't really able to accept consolidation above the Friday's high of day. The pre-market tested above. However, there was no continuation during the market hours intraday, 9:30 a.m. to 4 p.m. Eastern Standard Time. So the bull scenario didn't really play out. Bear scenario did not get any traction. There was no loss of 651. What's the low of the day anyway? The low of the day was 660.69 cents. So we tested below, but we never had acceptance below. Gap fade opens above, fades back towards 660. Not exactly. We didn't range either, so I would say that the gap and fade, you kind of gapped down, tried to hold that bounce. It's more of a consolidation scenario, if anything. We were just consolidating within the prior day's range. What do we have for range on the day? Range of $3.74. Wow. So the actual intraday range noticeably compressed compared to prior days, less than the QQQ base range. Our implied volatility base of $5.25 was not even tested. And there's no point in getting into the closed anchored sigma deviations. We didn't even get anywhere near that range today, intraday. The macro context, just talking about the higher time frames, what the different upside target is, being now 686 to 690, looking months outwards towards the end of 2026. And then just the session summary, key numbers at a glance. So I'll have another QQQ before the bell report issued for tomorrow. See if we can get actual range expansion or if we're going to be stuck sideways until FOMC rate decision on Wednesday. There's going to be some important earnings this week, I believe, for the mega caps. I'm not sure which exact mega caps are actually releasing their earnings this week, but I'm fairly certain there are some important tech stocks releasing earnings. So that's really all I got for today's report, or I should say the QQQ after the bell. My phone just died. So I don't believe there's anyone in chat with questions live right now. No live chat questions. I'm going to call this the stream right here. Until the next recording, stay green, traders.